Created by America's cable companies in 1979. Brought to you as a public service by your television provider.
Treasury Department officials spoke Tuesday about efforts to improve financial reporting by the federal government. From the American Institute of Certified Public Accountants Conference, this is just under an hour.
I'd like to welcome everybody to the session on Citizen's Guide to the Financial Report of the United States Government. My name is Joel Grover, and I'm with the Department of Treasury, Office of Inspector General. And I think we're very fortunate today to have two prominent members of the Department of Treasury speak today. Mark Rieger is the Deputy Assistant Secretary for Accounting Policy from the Office of Fiscal Assistant Secretary for the Department of Treasury. And Scott Bell is currently a Senior Staff Accountant in the Department of the Treasury's Office of the Fiscal Assistant Secretary. And with that, I'd like to turn it over to Mark and Scott, and they'll be taking questions after their sessions. Thank you.
Good afternoon, everybody. Mark and I are certainly honored to have been asked to speak to you all this afternoon, and we hope that you find this session informative, and thank you to Joel for the introduction. A colleague of mine sent me an op-ed article the other day. I think it's from the Wharton School, found it online, and it's called the USA 10K, Why America Needs an Annual Report. I found the article intriguing, given that myself and Mark Rieger and Ann Davis, who's here, are all from Treasury, work with the Office of Management and Budget and our auditor, the Government Accountability Office, to produce the annual report of the annual financial report of the U.S. government and the related Citizens Guide. And in fact, I've often referred to that, at least to this document and the report in general, and other presentations that I've made, as a 10K for the taxpayer. So, before we really get started, and I don't know if there's still someone here from AICPA, everyone should have a copy of the Citizens Guide. You should have received one when you walked in. Did you all receive, did anyone not receive one? Oh, great, so everybody has one, terrific. Now on the flip side of that, we did note that earlier this year that the financial report and the Citizens Guide were featured prominently in a video that was posted on the AICPA website and narrated by, I think, President Greg Anton. So word is getting around. But with that, I'd like to do a very brief survey. I know that this is a federal track session, but I wanted to kind of get a sense of who we're speaking to this afternoon. So would you raise your hand if you are a federal employee? Okay, that's most. Any state and local folks? And private sector? Okay. One more quick survey. Would you please raise your hand if you are familiar with, have ever seen, ever read, know of, seen online, the financial report of the U.S. government and or the Citizens Guide? I'd say that's about a half to two-thirds. So that's good. So we've got a good mix in here this afternoon. I'll explain then for those of you that are not aware that the financial report of the U.S. government and the Citizens Guide is not the budget. It is not the budget. The budget is a policy document that really focuses on the administration initiatives and plans for the coming years, whereas the financial report of the U.S. government is, as you can imagine, a snapshot of the government's financial position and condition with an auditor's report and a management discussion and analysis piece and supplemental information that is intended to be a complement, if you will, to the budget. And we hope that it would inform the folks that formulate the budget that kind of foundation for making those kinds of decisions. Hello. Okay. So before I get started, I like to begin this presentation with a quote to show that federal financial reporting really is not a new concept. And this is a quote from President Thomas Jefferson to his then Treasury Secretary Albert Gallatin more than 200 years ago. We might hope to see the finances of the Union as clear and intelligible as a merchant's books, so that every member of Congress and every man of any mind in the Union should be able to comprehend them, to investigate abuses, and consequently to control them. So, as the title of the session indicates, I will be talking about kind of an overview of the financial report of the U.S. government, particularly as we articulate the key information in the Citizens Guide, which we've been producing for about 5 years now. And then once I take you through that material, I'll be turning it over to my boss, Mark Rieger, who will be talking to you about a number of things, including kind of the audit challenges we face with the financial report of the U.S. government, and a number of the initiatives that we're pursuing at the Treasury Department, both with respect to the audit, but also with respect to federal financial management in general. So the guide that you have is intended to speak to the quote-unquote average reader. We try to target kind of the high school, college, graduate student level to try to make this information accessible to the general public. In 15 pages or so, it addresses some of the key issues that we talk about in the fuller 250-page financial report of the U.S. government. The government's current financial position and condition, economic recovery efforts, we have some information on that, although comparatively less so than we have in years past, given that we've really kind of turned the corner in terms of those types of issues that we've been dealing with the last few years, and social insurance and sustainability, which I will be spending some time on a little later in the presentation. It's important to note, for those of you that are not as familiar, the report that we'll be talking about, the information comes from the fiscal year 2011 report. Government's fiscal year ends on September 30th. The individual agencies issue their annual financial reports on November 15th. And then we typically release the financial report of the U.S. government after compiling information from literally dozens and hundreds of agencies in the annual financial report of the U.S. government, typically in December. This year will probably wind up being more like middle of January, based on some issues that we anticipate having to address at the same time later this year. So, we like to think in terms of the financial report of the U.S. government that we take a holistic, kind of a hybrid perspective on financial reporting. Certainly we utilize more traditional forms of financial reporting, such as looking at the balance sheet, operating statement information, net position, but we also spend a fair amount of time on what some would call non-traditional financial reporting, looking at some budgetary and economic information, and as I mentioned previously, social insurance and sustainability, which I will get to in due course here. So with that, we can actually get into the meat of kind of an overview, a walkthrough, if you will, of the Citizens Guide that you have before you. You're more than welcome to follow along. I'll basically just be walking you through some of the major charts that we have in here. This is chart 1. This is actually right as you open the book on your inside front cover. Compares the cash-based U.S. budget deficit over the last few years with the government's, what we call the bottom line net operating cost. Budget deficit, as many of you probably know, is calculated on a cash basis, literally tracking the physical movement of dollars in and out of the government on an annual basis. Whereas the net operating cost is calculated on an accrual basis, and the major difference usually year to year comes from costs associated with anticipated actuarial costs associated with federal employee and veterans benefit programs and things of that nature. That's really the essence of the difference between the two. Those anticipated costs impacting the accrual basis, but not the cash-based budget. These next two charts are charts 2 and 3 in your guide, taking a look at revenues and costs, what came in and what went out in the federal government. Chart 3 shows that total government revenues over the past 5 years. For fiscal year 2011, the total was $2.4 trillion, and most of that is comprised of personal and corporate income taxes, as we would assume. On the cost side, there's basically three tiers of costs that are presented in the government's cost statement, if you will. Gross costs to the federal government in fiscal year 2011 was $4.0 trillion. From that, we deduct an amount for what we call earned revenues, or those revenues that are associated with the delivery of programs to the federal government, things like national park fees, Medicare premiums. A comparatively small amount brings the net cost figure down to $3.7 trillion. That's kind of the first net figure, and it is that net figure that we are showing here in this net cost chart in the bottom right. This is showing it's a chart that shows the agencies that contribute the most significantly to the government's net cost for 2011. And as you can see there, the Department of Health and Human Services, which administers the Medicare and Medicaid programs, Social Security Administration, which is self-explanatory, and Department of Defense are usually actually almost always the big three contributors to the government's net cost. There are some other smaller segments there: interest on Treasury securities held by the public and amounts for Departments and Veterans Affairs. The all other encompasses dozens of other agencies. So that's kind of a quick snapshot of how the cost figure, the net cost figure for the federal government breaks down in 2011. Now, I mentioned there were three tiers. I brought you down to that second tier. The third tier is if you go back to the government revenues chart and you back out total government revenues, tax revenues and other, you come down to a bottom line net operating cost figure of $1.3 trillion, which you may recall from the previous chart. A quick look at the government's balance sheet, or as we call here, what we owe and what we own. As of September 30th, 2011, the government held approximately $2.7 trillion in assets, and most of that is comprised of property, plant, and equipment, most of which is owned by the Department of Defense. And also the other major piece of that is loans receivable and investments. Comparatively small asset figure compared to total liabilities. On the liability side, the largest liability that you see there, federal debt securities held by the public of $10.2 trillion. Now, even though this is at the end of fiscal year 2011, you may wonder, so what's the difference between that and the figure that I'm hearing in the news, usually $15 trillion of total government debt? So as of September 30th, 2011, the government accounted for what we call $4.7 trillion of what we call intragovernmental debt. And in very kind of brief fashion, that is debt held by one part of the government. It's debt owed by one part of the government to another. So, take any federal agency that has receipts coming in and needs to invest those receipts with the Department of the Treasury. So it invests those amounts with Bureau of Public Debt. Bureau of Public Debt issues a security to the agency has an asset. Bureau of Public Debt has a liability. Those amounts at the agency level in their reports do appear on their balance sheets, but when you consolidate that information at the government-wide level, those amounts offset. So we want to protect against double counting any amounts, so those amounts in a consolidated basis statement are offset, which is why you do not see it on the government-wide consolidated balance sheet. So you add $4.7 trillion to 10.2, and you come to roughly $15 trillion at that point, which we refer to as debt subject to the limit, or gross debt. The other major liability component that you see there is liability for federal employee and veterans benefits payable, and then there are some other little cats and dogs there of about $1.5 trillion. So,